Back, we're now looking at this expenditure cycle. Uh, Similar to the revenue cycle, we'll go through the typical process and discuss a bit, giving you a brief idea of what we can expect inside the expenditure cycle. So while revenue cycle look at the sales, basically how the business gaining money, the process will capture how a company generates their revenue. Expenditure cycle will capture how the company spend their money. All right, basically what activities that would build up a expenditure cycle. Uh, let us let us start over here. Expenditure cycle focus at various thing, but let us let us scope our perspective, all right, our perspective into the retail business, right? Retail business. Let me just go over here. Retail business. Same with the revenue cycle that we discussed earlier. The retail business, for a business that sell between business. So what we want to see is that what kind of activities usually involves inside a retail business. Of course, manufacturing will have its own, services will have its own as well. But let us look at the retail businesses first, continuing the previous revenue cycle. Um, of course, first, when we look at retail business and we scope our perspective into the goods that they want to buy so that they can sell it to the customer, first of all, is we need to know the process will start when there is a request, right? When there is a same with the revenue, there is a request. No, yeah, request, right? There will be a requisition, so there will be a purchase, requisition, purchase requisition. We'll start with the purchase requisition. So purchase requisition usually is in between, inside the company. There will be the one that take care of the stock, the one that take care of the item to be sold. They will have a system. Nowadays it's automatic. The system will automatically tell that, oh, this certain item already dropped below the threshold, and you need to do a new purchase. The system will give you a update, or a trigger. Then the person that's in charge, usually it's the warehouse team. If it's a big company, there will be a warehouse team. Warehouse team will be notified by the system that a certain inventory is below the order level. I think you learned the order level, right? And this team, the warehouse team, will what they will do, they will initiate a purchase request. Okay, purchase request, or we call it purchase requisition. Then this purchase requisition, you will send it to the purchase team, right? The purchasing team. In revenue, we have the sales team, right? So they will send this purchase requisition to the sales team to generate the purchase order. So what happened over here is purchase requisition. Usually they will inform what is the quantity that they need, the quantity plus the model specification. Then this is from the warehouse. This will be sent to the warehouse team. This will be sent to the purchase team. The purchase team will have to decide the vendor and quotation. Vendor and quotation. Once they have checked the vendor and they have a few quotations, it's like this. You want to buy maybe a smartphone, alright? Then you will ask from different vendor, and then different vendor will give you different quotations, and then the purchase team will check which one is the best. Then upon checking them, they will agree the quotation. Then they will generate the purchase order. Purchase order generate, it can be either way. It can be the vendor that give the purchase order. Let me see, the vendor give the purchase order, the vendor will agree upon the quotation, then the system will generate the purchase order. Because it's from your side is purchase, from the vendor side will be the sales. So purchase order will be generated by you. Okay. Once the purchase order is generated, it means the order is fixed, right? You will have the order agreed upon. Then once you have the order generated, number 3 will be the goods. Now receiving the goods. Receiving the goods. Okay. Over here, basically the warehouse team will check the goods. The warehouse team will inspect the goods. Inspect the goods. If the goods is good or not, check the quality control. If it's good or not. If it's not good, then they will notify the vendor. Report back to the vendor. If it's good, then they will usually update the system, right? They will usually update the system depending on the company. Certain company, when they receive the goods, they will update the system straight away. Certain company, they will have another side of system. They will check first. If it's okay, then only they update the system. If not okay, they will return back to the vendor or the seller. But in general, the process will be like this. There will be a receiving process. Okay, and usually the result from this is the generation of the goods. Receive note, GRN. Over here is purchase requisition, right? The output, PR. Over here is the purchase order, the output. Over here is a GRN. And this will actually update the system. Then of course the supplier now will chase after you for the payment. Before that, how they're going to chase you for payment? They are very professional. This vendor, they are professional. They don't call you, hey, I want payment. They will send you a love letter, which is a document called the invoice. Alright, so they will send you invoice, and you inside your company, what you will do is you will process the invoice. So invoice processing. Why do you need to process the invoice? This supplier, sometimes they say they want to give you discount. They say that okay, there's a certain special free gift they want to give you, but they don't give you, or they want to give you extra stock, they don't give you, so you have to check the purchase requisition. No, you don't check the purchase requisition. Do you check purchase? You don't check purchase requisition, right? Let me see. Do you check the purchase requisition when you want to process? Of course, we don't check the purchase requisition, because purchase requisition is in between the warehouse team and the purchase team. It doesn't involve the outside yet. You can reject the requisition, you can change the quantity of the requisition over here. You can change this quantity. Let me just go here. You can change the quantity, you can reject. So no, you don't compare with that one. So first over here, you will receive the invoice from the vendor. Vendor is the supplier lah, it's the same thing. All right, then you will compare with the purchase order, the first agreement that you made. Okay, then you will compare with the goods received note, if the quantity is correct or not. You're going to compare the purchase order and quantity. If this and this okay, then invoice processing pass. All right, then only you will go to number 5, the payment. All right, if not you not pay lah, right? Payment, you will have to go and check. Sometimes they say they want to give you free gift, but when they send to you, they only give you maybe they say maybe, okay, if you buy 100 quantity, they will give you extra 10 as a free gift, so that you can sell. You can earn from this 10. However, maybe when they send to you, the good received note only reflect 100. Okay, then you have to go and ask the vendor or the seller to give you another 10. Then only you do the payment. I don't know. Usually if you do the payment, then they will say to you bye bye already or go away. But usually they don't do that lah. I don't think, unless the company is the one that don't want more business or sales from you. Usually, but sometimes there's still an error will happen, so you still need to double confirm. This is what they call the triple confirm method. It's an internal process. I will show it over here straight away. Of course, we will go into detail talking about the internal process later on, the chapter when we touch about the internal control, internal process, internal control. Right, when we talk about the internal control. And pretty much that's it for the expenditure cycle for our retail business. What about manufacturing? I'd like to pull your attention to manufacturing businesses. Manufacturing businesses also go through the same process from 1 to 5. Maybe they will, instead of requesting the goods, right, they will request maybe the raw material. They will look at the raw materials. And alright, by the way, alright, this process is also valid for like other purchases. In this, like we are looking at the stock to sell, right? But it might be also looking at maybe furnitures for their business to operate. That's why they call it the expenditure cycle. It is not limited to the goods, but it's focused on how, when a company want to spend the money. When companies spend their money, they will go through a sequence or steps of activities, and usually they will go through these kind of activities. They will go through requisition, recognizing that they need to have something, they need to purchase something, all right, and then they will select the vendor, which is to generate the purchase order, and then they'll be receiving the goods, they're receiving the items that they are requesting, and then they will process the invoice sent by the vendor. After that only they do the payment. It goes through this sequence of process in a company, in a typical way, right? Of course, in specific case, there will be a unique case, and then they will have more processes or special additional processes to it. But you will see this will be general. So for raw material, they'll go through the same process as well. Services, services is also same. Services, maybe they want to purchase if we talk about the aircon installation, right? So maybe they want to purchase the pipe for the aircon, all right, or the gas, for the aircon. This they will go through the same process, or a big company, right? They will go through this requisition, purchase order, checking which vendor they want to purchase from, and then receiving the goods, and then process the invoice, and then do the payment. Yeah, pretty much that's it. We will look at the case study over here, but what I want to do is, since the case study we by this time the case study will be more shorter, right? We have used a long time to discuss on the case study. Let me finish up the theory part, okay? Because for the general ledger is very simple, very straightforward. General ledger is basically discuss about the part where you want to the company want to do the transaction processing. Transaction processing, we are doing the we are trying to general ledger is the part where it is the end of the process, to end of what end of to produce the reports. Basically, you want to do what some more, right? You got the purchase, you got the revenue purchase, revenue expenditure. Of course, we have human resource and payroll, which we will discuss next week. We got the production if for manufacturing, but for this normal businesses, retailer, they don't have production. But if you look at the book from Savage, they talk about conversion process, and conversion process basically is the same like production, but retail they don't have production. Retail they will have planning, right? They will have planning, and then services also they will have like planning. So instead of having a production, they say it's a conversion process. We'll look at next week. Okay, over here only three things that inside a general ledger. First is the adjustment. So you learn accounting, you know lah, there's this adjustment for the depreciation, adjustment for the interest, what adjustments are more? Accrual adjustment, right? Accrual adjustment, all those type of adjustment. All right, the first process to generate the financial report is the adjustment. You need to do the adjustment, can't run away lah. The adjustment, maybe you have provisions. Okay, and next after you done all the adjustment, provisions, usually you also do those interest charge from the bank interest charge, the interest charge of the bank lah. But if you don't do it over there, then when you do the performing the bank reconciliation over here, bank reconciliation, then you will do the adjustment for the bank interest as well during this this part. It's the same, alright. It's the same. Mostly it's the same lah. Mostly when you talk about generating the financial report in the system, right? They will go through adjustment first, then they will do the bank reconciliation. Then number three, which is the financial, generating the the financial reports. This is when you are happy with when you done the when you complete the bank reconciliation pass. All right, you check and then okay, it reconcile back the bank between your system and the bank statement. Then you can generate the financial reports. And yeah, pretty much that's it. It is similar throughout the three is it three businesses, type of businesses. That's it. That will be a case study we'll discuss. This one is very easy. Tune in for the next video where I will discuss on the case for this expenditure, the data flow diagram, and also this one. What's this? The data flow diagram for this. Okay.